A very good afternoon to you, everyone, or good morning or good evening, wherever you're dialing in from. Welcome to the Renaissance Services SAOG Investors and Analysts meeting covering our fiscal year 2024. It's very nice to have you all with us. You have with you from our side, as usual, my colleague, the CFO, Juma Al-Khamisi, and myself, CEO Stephen Thomas. We're not going to go into any major introduction on this occasion because you have the benefit of our chairman's statement that has been released in some which carries a lot of detail and gives you the overview for the year. So we'll utilize the time for you best if we go straight to your questions, and we're open and ready for the first question, please. Thank you.
And if you go to Josh Smith.
The first question is from Amit. Amit, please, over to you.
Thank you so much. So just wanted to know what is the occupancy level in your RSVD and PAC, and where do you see it going the coming years?
Sure. So the occupancy as it stands today is just around 6,000. As you saw in our actual report, the year started at the lowest point that we've ever been at around 4,200, and it's risen to 6,000 by the end of the year. In terms of where we see it going, we have two scenarios painted out before us. One that we are pretty confident on, which is that it will hit about 10,300 by the end of the year on a fairly steady climb to do that. And another is a stretch target of 11,400 odd, which we think is also possible during the year. And those numbers are put out in graphic form in the full annual report. In the CEO report segment of it, we've actually shown you what those predictions are for the year. Now, how confident are we in those numbers? They contain some specific histograms given to us by clients who have asked for space. Now, obviously, the projects have to start on time. They have to be, we factor in some of that. So we believe that this is achievable in the course of the year. And that would mean that we have a significant increase over what we did last year. Obviously, it's not taking us into the sort of heady heights of 2 years ago when we were up at around 17,500 at peak. But that we envisage as the new projects come in. Now, there is also news in the market, you probably hear as much as we do, of an expected announcement of timing for the Petchem project, which, if that comes through, of course, will then give us some significantly high occupancy in the years to come. But at the moment, that's what we're expecting in Renaissance Village during the course of this year. In terms of the PDO villages, the PACs, as you know them, at the moment we're around, our capacity there across all is around 10,123. At the moment, the start of the year with some changeover projects, we've started a little low at around 75% to 7,500. We are expecting that to come into the 90 percentiles during the course of the year, so we'll be up around 9,002, 9,003. That is what we're expecting on the occupancy front of those two businesses. I think, you know, it really is, it's an important question because here is a real potential for growth for us that is already in hand. We have the infrastructure, we have the capacity, we have the people to provide the services. We need no further overhead, etc. So it's kind of growth that really just picks up variable costs as we serve our customers in those locations, and the rest then flows to the bottom line. Thank you.
Yeah, I didn't just catch this number. Your pack occupancy is around 9,000 for this end of 2024. Is that right?
No, we're expecting it to get back up to around 9,200, 9,300 during the course of the year. It's at the moment just under 8,000. It went down to 7,500, about 75%. But it's coming back up. This is with changeover of projects, but there's some significant movement coming in this month.
Okay. And my second question is on your margin. So historically, we've seen that despite the macroeconomic situation, margins is one area where the company has always outperformed. And I think 2024 to able to maintain around 18.6, 19% margin is great given the impact on the occupancy numbers. So here I just wanted to know where you see the margins going once the recovery in occupancy happens, and if you could give any number on the break-even point you have reached now. Thank you.
Sure. So in terms of margins, our overall margins as a company have again sort of generally held up in the performance this year. When you talk about occupancy going higher in both Renaissance Village Dukem and in the permanent accommodation for contractors, the margins in those businesses at peak, when you get to the higher occupancy levels, are greater than the margins in our pure services business. You'd understand that because obviously we've got the capital cost is in there, so there's the cost of the accommodation as well as just the pure services that are provided in that. So when you get higher levels of occupancy, you get better margins in those two businesses, and that flows down in a positive way to the overall performance of the company. So when we get to higher occupancy, you could expect a better performance than the sort of the traditional 10% overall that we make at the net level. In terms of break even, we are very profitable already in all our businesses, except the following, where in Renaissance Village Dukem, where we have always remained a bit positive, we were negative at the PAT level in that business last year. But we will be passing through the sort of the break-even level, which we've actually brought considerably down. And we expect that to be at around 7,000, 7,500 occupancy, which we're not too far away from now. So we're expecting Dukem to be profitable this year with the average that we've predicted over the course of the full year. So it's above break even is what our prediction is for this year.
Just to expand on this, our actually, even with the very low occupancy, we still our EBITDA is positive. So our EBITDA break even is between 2,600 to 2,700. So we are already for that. So even though with the negative bad break even, we still are positive in the EBITDA, and we've been able to serve our financial commitments easily.
Yeah, and to just build on what Juma said there, it's important to note, as we've described before, every project that builds requires larger numbers to build them, but they leave behind a residual smaller workforce.
Yeah.
And so of our current 6,000 in the Renaissance Village Dukem at the moment, 4,500 of those are permanent. So our permanent signed up occupancy is greater than our EBITDA break even level. So this is a positive thing underlying the performance as we go through this trough. And the point of the trough is that we're actually on the way out of it. We hit it at January of last year, and we're already considerably higher occupancy at the end of the year. Thank you.
Thank you. That's it from my side.
Thanks, Sam. I think Joyce is the next on the question.
Hello. Thank you, gentlemen, for the opportunity and the presentation. Just to follow up on Steve, your comment on what we are looking at for the 2025 in Dukham. So what would be the average occupancy that you are targeting? Because you said right now it's at 6,000 and you're targeting around 10,500 on the base case. So is it going to be a gradual increase, or are we looking at specific time periods where there will be new additions, new occupancy, higher occupancy in Dukham?
Yes, as I've described, we're expecting to end the year up around 10 to 11,000 occupancy, and therefore we're expecting the average across the year to be north of 8,000. So this will be in positive territory, in profitable territory.
All right, thank you. Steve, now, one new addition that I've seen in the chairman's report is the growth strategy that you are talking about, specifically in the M&A. You have mentioned that M&A is coming into the forefront and you're actively looking at opportunities. Could you throw some more light on that, in terms of what are the kind of sectors, the sectors that you are looking at, or the opportunities that you are looking at? Now, one is in Oman, and then you said you're looking at both in Saudi and Qatar, as well as your UAE operations have turned profitable. Congratulations on that. And you are looking at further inorganic opportunity there. Can you please give us more light on that, on each of these aspects?
Yeah, I'll speak generally, and then Juma, perhaps you'll put some specific color on. Obviously, we sign NDAs with the parties involved, so there's a limit to the detail that we can give. But I think the important thing about your question, Joyce, is that we've made, you can see the strength on our balance sheet. You can see that we've got headroom, and not only to give a dividend and to enhance that dividend again for the second year running, but also to look at using cash to grow the business in a particular way. Now, the actual target markets that we're looking at are in our home market of Oman, and more specifically, you mentioned Qatar, but we're more specifically on M&A, looking at KSA and UAE. And in terms of strategically what type of businesses, now we've been through the diversity of the services. While we're a services company, and that single word, we range from IFM, a range of soft FM services, a range of hard FM, as well as waste management, utility services. So it's quite a broad spectrum. And we're looking and we're open to growth opportunities in any of those service or sector areas. However, our maximum desire, our target desire, is to actually focus on M&A that not only gives us geographic footprint and presence and scale, but also is going to give us perhaps strengthened skill set. So where we've got the most room to grow in some of the hard FM services, etc., and IFM would be priority targets, particularly in the new markets. In our home market, we don't mind. It might come from any of our traditional businesses, because the economy of scale that we would get from absorbing additional business into us would be significant, whatever the service is. Juma, I don't know if you want to talk about some of the types of opportunities we've looked at and turned down, and others that are still live. Yeah.
Yeah, so actually we are in terms of an M&A, we are looking to opportunities first in Oman. In Oman, we know the market very well, so we can capitalize on our knowledge, and we can also add value to the businesses which we acquire. So we have been looking to different verticals in Oman, and also as Steve mentioned, also we are looking to the GCC countries, specifically in Saudi Arabia and UAE, where we see the synergies. And wherever we go, the most important thing is to capitalize on our strength and to create a value addition for our shareholders in terms of return. So we have been looking actively into the markets, and of course, we will announce anything whenever there is a material improvement in those opportunities.
Okay. Could you just guide us on the timing, the potential timing, or the size of these transactions that if that comes in, probably will it likely to happen in the first half or second half, something like that?
Well, Joyce, what I would say is that if we look at some of the things we've already analysed and decided not to go forward with, those could be happening now had we decided to do it. And M&A is often, it's driven by what is available on the market, and then its suitability for the business, and then of course the stage of actually integrating it culturally and physically into the organization. And all of those factors have to be considered. So I think by voicing this as openly as we are doing now, is intended to let professionals in the market know, as well as maybe competitors who are thinking for various reasons to divest their businesses, to let them know that we are actively looking. So some of these things could happen fairly shortly. So we're actively looking now. And once you get a green light on something, these things can happen fairly quickly. Obviously, you've got to go through a very professional due diligence process and everything else, and that has to be done. But we've got some serious opportunities in view at the moment. Do you have anything to?
Yeah, I mean, maybe you should understand how M&As go, so it's very difficult to predict the timing for it. So, but we assure you that when anything material, we will be put it in the public, and we might discuss it.
Yeah.
And for the time being, we cannot say when and how, because we're still exploring. And you probably know, Joyce, how these kind of things goes. It can be as long as you couldn't predict. Sometimes it happens and earlier than you expect as well.
Okay, got it. Thank you. Another thing that I have is on the PDO permanent accommodation facility. There, now you have mentioned that you have further scope for capacity addition. So, what did you mean by that? You said the temporary accommodation facilities once they are retendered and everything. But could you please throw some light, and also connect it to how we are seeing the Manazil project coming up?
Yeah. So on the point about PDO, you will recall, as you've mentioned there, that we have expanded. We used to be around 8,500 beds capacity across all the pack. And with the expansion, we are currently at 10,123 beds. Now, some of those expansion areas, and this is a temporary facility that would operate for about 5 years, and that would then become part of Manazil and become the shutdown camps for Manazil when it's happened. I'll come to Manazil in just a moment. But in some of those areas, those expansions that we've put in have filled up. In a couple of areas, there's a downturn in occupancy with major contract changeovers in Marmol and Baja, for example, where we're lower occupancy in spite of the expansion. Now, our client is working very diligently and hard with us to where there have been approved camps outside the pack fence. These, as their contracts come round, are shutting down and moving into our packs. So we'll start to see that movement coming much stronger in this year. So we are expecting to come up to a high 9,000 plus occupancy in the packs, 9.5, 9.7 in the course of the year, which is close to our 10,123 capacity. On Manazil, we're expecting the tender to come out this year. Now, there's two different parts of this. So the Manazil that came out before, that was then put on ice, has been replaced temporarily by these temporary expansions of the packs, because that means it gets people working in the oil fields at least out of camps that don't have the full facility requirement to meet the United Nations ILO standards and PDO own standards that they want to see their contractors have, and hence want to move them so that they've got access to the pack facilities. Now, Manazil will now be in two parts. One is that PDO will now build their own replacement camps. So PDO have 11 camp locations across all the oil fields, their concession areas. And in each case, there will either be a brand new PDO facility built, or where some of those facilities have new buildings, etc., there will be a conversion of the existing facility with a lot of new build happening in and around existing facilities. And at the moment, the soft services operator for those 11 facilities is ourselves. And you remember we were given that contract for a year, and then one of two things will happen. This will be rebid during this year, and then the opportunity to have a 3 to 4 year contract, or it may be extended. I can't talk more about that. But that service will move during those 3 to 4 years when the PDO new build of Manazil happens. Whoever's providing the services on those 11 sites will transition into the new Manazil PDO camps. The second part of Manazil is for the contractors. And that means that everywhere where there are existing packs, there will be either a new pack built, an additional pack built, if there's the winner of Manazil doesn't currently operate packs, or it will be a current pack operator like ourselves who will be allowed to extend and expand their existing facility. Now, obviously, there's a tremendous competitive advantage in being an existing pack operator who just has to expand a facility that doesn't need new central services like a clinic or a reception or a swimming pool, etc. They're already there. Roads, lighting, it's already in place. So there's a great competitive advantage for those of us who are existing pack operators to bid to expand. That will be, so we currently have 10,123 beds. What will be up for bid will be just short of another 10,000 beds in the pack where there are existing packs. Then there are some smaller site areas that don't have packs at all at the moment. And then there will be a chance to bid for new contractor camps in modular fashion, but with many pack features. But they'll be new, they're greenfield, so it's a level playing field for everyone bidding those. And there is another just short of 10,000 beds in those locations. So on the contractor side, the Manazil bid that comes out later this year will be an opportunity to bid for just short of 20,000 additional beds. And when all that's built, everywhere there is no pack and people are living in their own contractor camps, those camps will be shut down and they will move in to either the expanded packs or new packs or the new contractor facilities where there are currently no packs at all. So it's a tremendous opportunity for us when you consider that our company has always won the maximum allowed to be won in any bid. So if it's a bid where there are 2 packs to be built, we've always won one of the 2. If it's a bid where there is only 1 pack to be built, we've always won that bid. So we expect to be a serious contender in the Manazil opportunity when it comes. And whilst I'm sure that those 20,000 beds may well be shared between more than one service provider so that there's a competitive tension retained, we expect to be a serious contender to go after around 50% of that opportunity. Thank you.
Aziz Farsi is rating Karen.
Hello, good evening.
Yeah.
Question about what specific sector contribute the most to the revenue increase in Q4 2024?
Sorry, Abdulaziz, I didn't catch that. Did you?
What specific sectors create more revenue in Q4? So in Q4 basically is more on the utility sector, where we have actually get 2 contracts from MADC and also from BDO IFM. We have also have that contract in Q4. This is why you see the growth in Q4 quite more than the previous 3 quarters.
Yeah, so we specifically rolled out in December alone 250,000 smart meters, which our client informed us as a ceremony that they awarded us is the fastest rollout in the region of that number of smart meters. That happened in December. And of course, the PDO contract mobilized in October. That Juma refers to.
All right. Thank you so much. Basically, me and Abdulaziz and Daniel, we're both colleagues and we represent Tanmia, Oman National Investments Development Company. So that was our first question. Just to follow up on that. So it means there are out of 400,000, 250,000 meters were rolled out in December. So is there any backlog now remaining or all of the meters are rolled out?
Yeah, there's no backlog remaining. So that assignment has happened during the course of the year, but it's the final 250,000 went out in December of the 400 that we've rolled out during the year. So what is live at the moment is a tender opportunity. So where we rolled those out is called Zone 1, up here in the capital area. There's a tender opportunity now for the rest of the country called Zone 2 and Zone 3. And this will mean that in the course of this year, there's an opportunity for whoever wins that, and again, we expect to be a serious contender, to roll out 350,000 meters during the course of this year.
All right, that's great. And do you expect this to happen earlier in the first half or second half?
Well, we expect the decision to be taken in the first half, and then once it's taken, we're pretty well up and running and mobilized and able to get going. And I think that's something that the client is looking for. The client wants this done as quickly as possible. And as in the case of last year's push. So we expect it to happen quite quickly once an award is made.
All right, one more associated question. We just saw and realized that the general and admin expenses were anomalously very high in Q4. What explains that? Does it also include the provision with regards to Miqdam, Qatar?
Sorry, Abdulaziz, I didn't get the question.
Yeah, we're getting a bit of feedback on your line, Abdulaziz. It's no problem. Just say it once more for us and we'll catch it.
Sure. So basically what I'm asking is about the general and admin expenses
Yeah.
for fourth quarter that have been anomalously very high versus the past 4-6 quarters. What explains that? Is it because of the utility smart meters rollout expense, or is it because of the provisions also recorded here with regards to McDowell?
Yeah, so it is, yes, basically you spot it right, which is the specific provision we have made it in the quarter, in the last quarter, which have that impact on.
Okay, but even if I exclude that provision of 1.1 million, the total G&A expense is 3 million. Even subtracting that is about 1.8 million, which again is very high versus all your previous few quarters. What led to that high expense?
So normally, see, I mean, we are getting adjusted the numbers at the end of the fourth quarter. So this fluctuation might be the reason of that. Provisioning is one side of it, and the other side is to normalize the years, doing the cross reconciliation of the provision toward the quarter four. So that can be the reason. But I will get you the details. Once we got the details, we can go offline if you need further detail on that.
Sure. Thank you so much. One more question with regards to the waste management project that you guys have. Can you just give an estimate of how much actually it contributes in the revenue, and what are the margins profile on that? Like, what basically work are you doing for BI? Is it recycling? Is it waste collection? Is it depositing? Is it the operation of trucks? Can you spell out more on that, please?
Yeah, and you'll forgive me, Abdulaziz, if I don't go into the details of the numbers. And one of the reasons is that there's the opportunity of competition for growth in that. But let me tell you what is happening, because this has been a profitable and positive entry into a new service market that we've now been in for a few years. But what happened is that and when the government decided to privatize waste collection primarily, it has set out in 8 different contracts, the largest of which, Muscat Zone A and Muscat Zone B, etc., are operated by other service providers. And we came late to that competition with our partners from Italy, Saja, so Renaissance Saja Environmental Services, and we won the final 3 smallest of it. So we actually have about 8.3% of that waste collection market as a total, and these were 7-year contracts. And those 7-year contracts had started going out in 2017, so some of them have run out and been extended recently. And for us, we came into it a little later and got our first contracts in 2020, and therefore they're due to run out in a couple of years' time. Now, in terms of the services that we provide, all of those contracts have one thing in common, which is waste collection. Ours had slight differences in the PDO, because we won in 3 areas: PDO, the concession zone, the whole Al Worcester area, and the CZAD area. They're 3 different contracts. In PDO, we also had the task of dump site clearance of all the old dump sites that accumulated over a long time, lots of wood, stone, iron, steel, etc., all to be cleared up and done. And we've finished that work, which was part of that contract. But what that does give us is in-country a unique track record of having done that very successfully, ahead of schedule, and safely without incident, which is very important to the oil field client and to BIA. The other thing that we do have, because of the area that we're operating in Worcester, is there are many other additional services. There's lots of beach cleaning involved down the coast there. that's part of that contract, not part of the contracts up in the north and along the Batna, which is still performed by the municipalities. Also, we're dealing with major things like roadkill and so on. These are quite sort of specialist things to be able to remove and dispose of cleanly and safely. So we have a few differences, but it's basically waste collection. Now, where the opportunity lies for us is, and one thing I have said in this forum before and will say again, we are very proud of the fact that when BIA publishes to all its service providers the performance KPIs, there's only 3 contracts that are above their required 95 percentile performance. And they're us. We're 1, 2, and 3 in those 3 contract areas. So we have a client who's very, very happy with our service level and performance level. Now, where will the opportunities come? In waste collection, it will come, there's an issue now of BIA transferring, or at least offering to the municipalities, the governorates and municipalities, the opportunity to take waste collection back under their banner now that the privatization phase has happened. And so that is happening as we speak. Now, for us, BIA will continue to be the client in CZAD zone. That may change in time, and it may become CZAD. And BIA will still be the client in the PDO concession area. But what will change is our client in the Worcester area will change to the Worcester Governorate, and there are then 3 municipalities within that governorate. So that process is happening for all the other service providers in the other contracts around the country, from the capital area to Salalah to Shakir, Batna, and all points east and west. So where those contracts come back out for tender, and there's been some extensions happening in order to enable this transition to happen, we have the opportunity to bid for those as well. And for that, it gives us, we only have 8.3% of that market. So we have the opportunity to grow depending on our competitive success in bidding those contracts. After that, where will the growth come from in the waste sector? Will be from other forms, waste treatment, recycling, landfill management, a whole range of different things, chemical waste. There are different things that are performed either by, self-performed by individual entities or government that will come to the private sector in time. And we stand ready to perform those services as they come out. We picked up a small but important contract with the new Kazan market facility, where we're looking at, we're doing all their waste management, etc. And we're looking at how do we compost the food waste from the market, etc. To make it smaller in terms of what goes to landfill, but also then what could be used and recycled into agriculture usage and so on. So these are the kind of opportunities. I know I'm not giving you color on numbers because the issue here, Abdulaziz, it's a very competitive environment. Although it's good margins when you win in this area, but I don't want to put too much color on numbers when there's such a competitive opportunity coming up for us in the coming months and years.
The other things, Abdulaziz, regarding your previous question on the administrative expenses, what is in quarter 4 also the mobilization of PDO contract is one element to increase the admin expenses, and also NAMA contract, because we have deployed over 200,000 of smart meters. That's caused also some administrative expenses, which is comparing to the previous quarter is much less.
Okay, got it. Just two more clarifications. Number one is regarding the market share. Did you say 0.3% or 8.3%? Number one, with regards to the waste management. And number two pertains to the duration of these contracts. Are they renewed every 2 years, 4 years, or how does it work?
Yeah, so it's 8.3% of the waste collection market.
Thank
Now,
you.
waste collection is only one of the features of waste management opportunities, but it's a significant feature in terms of that has been privatized across the whole country. So we only have 8.3% of that, and I say that as a good thing because it means we've got a lot of headroom when you're performing 1, 2, and 3 in the marketplace, and they all serve the same client. Then we've got a real opportunity to go after that. The contracts have been, the first contracts have been 7 years. We will have to wait to see what the second generation contracts will be. Some will be being issued by municipalities and governorates, some will be being issued by PM. But generally speaking, they are lengthy contracts. I wouldn't, I'd expect them to either repeat the 7 years or as a minimum come to 5 years, because there's a big investment to be made in the trucks and the infrastructure, in the number of bins and so on. We uniquely, in our contract, we've put in obviously bins, we've put in a lot of technology in terms of the bins and the trucks and the linkage between them, as well as the only one that is actually in Al Worcester getting segregated waste, so that we can, where we find an end user, actually be recycling that waste. So those are things that we've got to march on in this sector, in this country.
All right. You also mentioned in the report that your UAE operations have turned profitable.
Yes.
Can you just shed some light on that?
Yes. Now, our UAE operation continues to be small. It's a business that works out of central kitchens in the different Emirates, as well as some individual contracts on the back of that. We have struggled to turn that round, and I think we've had that conversation in this forum before. I'm very pleased to say that turnaround did happen in the course of last year, so it is now a profitable business. It is not a business that is making a huge contribution to us, but at least it's not detracting from us now. Now, that is why, in the conversation we had a little early on about M&A, why we're targeting UAE for M&A. One of the things that we've learned is it is difficult to just grow organically in a new market, even when it is a close market that has many, many similarities. The reality is that in each of those markets, in most of the services, whether it's soft or hard FM, there are already established players with established, whether they're international players with established local partners or they're established strong local businesses. And it is sometimes difficult for people to make that leap. Why would I go with a new contractor from a different country coming in when I already am comfortable with what's available here? So that is why we believe that we do need to, if we're going to make a quantum leap of growth in those markets and establish a greater footprint, the best thing to do would be to do it through M&A and acquire a larger footprint there. So when we do that in UAE, it is something that will be complementary to the smaller business that we have there now that is now profitable, because it will then give this sort of economies of scale for that business that doesn't need, every business needs an overhead, however small it is, to run it. And so we're expecting that and looking at in our M&A activity in UAE, how can it actually synergize and benefit the existing business there? Thank you.
The geographical basically segregation says that out of 107 million revenue, almost 8 million came from Middle East. is it safe to assume that most of this came from UAE only?
Yes, you can say that.
All right. And the last thing I would like to say is that basically you mentioned that you lost three contracts, Badil, Oxy, and another company as well. So have they ended now, or are they supposed to end in the near future?
Yes, so those contracts finished during the course of last year. And I think, I would not be speaking out of line. I mean, people are welcome to take references from our existing clients and our former clients. And I'm very happy to say that we're a company that has very few former clients. But where we do, and these were three superb clients. I mean, really they're very professional companies working in the oil and gas space. But margins are very, very tight in the pure services. And sometimes as an incumbent, you know too much. You know exactly what the client wants, exactly what those requirements are, etc. And what happened in each of these cases, where we were the second lowest bidder. And so other bids higher than us, which gives some credibility to our price. But where the lowest price was significantly below. I mean, in one case, I'm talking 30 to 40% below. And I can assure you, we were not making 30 to 40% margins. I wish we were, but that's not the case. So in those cases, it's difficult sometimes, there are government shareholders and state audit looking at these things, who, if you've got a technically qualified bidder and their bid at a low price, even if it is looking dangerously low price, there is a compulsion to go after that low bid. So we wish all our competitors well, but I think there will be some struggle in some of those contracts to provide a compliant performance. So one thing is, if the price is wrong, something suffers. Either your bottom line suffers or the compliant service suffers. And so we look forward to those contracts coming round again, and we will look forward to competing for them again. There's no right to say that we would win them all. I mean, what was very gratifying was that we managed to pick up the PDO soft services at 11 sites. The intention of that bid was that no one would win North and South. We won both. And, we get the economy of scale of that. So we've been able to replace the lost business, but obviously we'd have been a lot happier talking to you today if we'd held all of that and gained the PDO one. But this happens in the course of business, and we don't see as sort of anything to worry about. We've taken a view, we're not bidding for loss-making contracts, and I know loss-making contracts are a feature of services around the world. You see it in the annual reports of some of the global leaders in our industry. They're always reporting on their loss-making contract. But we're really looking at a portfolio that doesn't carry loss makers. It happens every now and then, but then we're looking to correct it and make sure that that's not the case. So it does mean that we won't always be that lowest bidder, but we look to be the lowest technically competent bidder. People know when they get the Renaissance project, they get us as a differentiator that will be a competitive price, but which guarantees you many of the things that our clients are looking for. The safety. They want to see that they're going to get that proper safe performance in the oil and gas fields, and indeed in all our contracts. The life cycle value that we provide, the responsible green environment, really positive local impact, and also some future-focused innovation. All of these things come with a Renaissance project. And we look to deliver that at the fiercest, most competitive price possible.
Thank you so much, and all the best to you.
Thank you very much.
Thank you.
Amrit, are you going again?
Yes,
Please.
just wanted to ask, what is the split between your accommodation service and catering service revenue in percentage terms, roughly?
Again, Amit, actually, we regret that this level of disclosure, we don't want to disclose for competitive
Okay.
advantage.
Okay.
So,
Understood.
sorry for that.
Thank you. No.
Yep, few hands up.
No, second.
Joyce.
A few follow-up questions on certain things. Like, do you have any target IRR in mind for your new investments? I mean, the M&A opportunities that you will be looking at?
Actually, there is no specific target. It depends on the sector where we are. But of course, we are targeting double digits IRR. But it depends actually. Sometimes where there is opportunity which starts gradually less than that, we will evaluate it on an individual basis.
Okay. And on the acquisition strategy, would you be looking at all cash acquisition, or will you be open to a share swap plus cash, or a total share swap, something of that sort?
Yeah, when we find the right opportunity, then how we structure it at that time, we will structure it at the optimum level. We'll see what is do best for us, and if there's a partner as well. So at that level, then we will look on how to structure it in the proper way.
Yeah, I mean, the opportunities that have presented themselves so far are people who are looking for a full exit. And in those instances, we'd be looking at a full acquisition. We do not rule out partnerships. We do not rule out, creating new joint ventures in which we buy into, etc. So we're very, very flexible in our approach here. One thing that we have noticed, and this is not to be arrogant, but it's to be more reassuring to our investor and analyst community. We've obviously, when you open the lid after signing your NDA on competitor companies, it gives you insights and comparatives as to how you are performing. And we've been very pleased to see that whilst there's always room for improvement, and we've done that with our own operational excellence and our other initiatives, we always find a new way to do something better and think, well, we could have done better before. But we find in comparisons that our performance metrics are very, very positive in comparison as well. Now, when you get an M&A opportunity, as you synergize the two organizations together, we looked at those would be things that would also increase the performance metrics as a result of coming together in the economy of scale. Thank you.
Thank you. Another question is on your coming back to the Dukam accommodation. What we have seen is there was a higher loss during the final quarter of the year, whereas your occupancy levels has been on the higher side because most of the lower occupancy was in the first half or mid-summer. But when it came to the winter, you ended up the year with 6,000 beds occupied. But at the same time, the loss contribution has been higher. Is my reading correct, or am I missing something there?
So on occupancies in the packs in particular, you're talking, Joyce?
No, I'm talking about Dukam. Yeah.
Dukam. No, so Dukam has come up during the year, and actually, if you go to our annual report, in the CEO report, we're actually showing you the trajectory where we've come down during 23 to hit that low point at the start of 24, where we've come up during 24, and where we're heading upwards, and we've got one likely target and another stretch possible target in 25. Now, what you will have seen at the end of the year, we came up to 6.5, and we've come back down to 6. If that's something that you'll notice, then you're very perceptive, Joyce, but we know that of you. But that's a temporary phenomenon where you've got a short-term contract, somebody coming in, working on a road project or whatever it is, and then they move out. And the overall projections we've actually put in the report there for you to see.
Yeah, but if you look just to the overall performance, I mean, the last quarter performance has been impacted with the specific provision of 1 million. So that might be the thing which is abnormal to you across the quarter if you are looking quarter to quarter.
I understand the 1.1 million, but I was specifically referring to the minority loss contribution, which has increased during the final quarter. So no, was just checking what has really happened there.
Any further question, Josh?
No, I'm fine. Thank you. Thank you.
That's explained by my point about the 6.5 coming down to 6. There's slightly, it came off the boil a little, but it's still on an overall upward trajectory. Yeah.
One more question. One last question that I have is on your. You mentioned in the report that there are 3 live PPP opportunities in KSA.
Yeah.
Could you please explain, what are those opportunities and the likelihood of their decision coming up and during the course of this year?
Yeah, of course. Now, so one of those is one that you and others, regular visitors to this forum, will be familiar with, is the border post that we're doing in joint venture with Vision Invest, the Saudi Vision Invest company, and that the client is Zatka, and that is a significant opportunity. It's just being rebid with best and final offer because there was a change in scope where with the security issues in the region, they wanted to increase the number of vehicles being checked going through those posts. Now, that is a significant opportunity, 20 years, in which we would be providing the FM services, for soft and hard. In either you can win 50% of the bid. There were 6 locations; they're now being reduced to 5, but the scale remains the same, and you can win either 3 or a similar size of 2, and so that remains a very live opportunity, and we're, amongst the remaining shortlist bidders for that. Now, if that were to be awarded, it would be a very significant announcement in terms of scale, the value of it over those 20 years, of which 50% of the value would come to us. But we wouldn't start earning that for a couple of years because the facilities have to be put in place first. But it would be a significant entry on scale into that market, and a sustainable entry as well. Now, there are 2 other PPP opportunities that we're bidding with the same partner in the same market. These are both accommodation solutions, very similar to what we've done in Duqm. One is with Aramco, and another is with Zatka again. They're in a more formative phase. It hasn't reached, the bid has not gone in yet, but the pre-qual is all done. We're pre-qualified and through there. Saudi is definitely moving towards a model. I remember when we were talking before about what we've done at Duqm is playing where the ball is going to be in terms of worker welfare and minimum expected standards, etc. And that is exactly what's being specified in these examples, where they're again looking at 20 and 25-year PPP options to put in significant accommodation facilities for workforces. exactly to the standard that we already provide here. So our pre-qualification has gone very well there. Those are the three. Thank you.
All right. Thank you very much. That's it from my side.
We are crossing 1 hour. If there's any final question in the queue, guys, or we will close the session. Abdulaziz, you want to take that?
You're on mute, Abdulaziz. You're on mute. You're on mute, Abdulaziz. We're going to take one more question because we go segueing straight into another call. But
No.
go ahead.
Yeah, I already asked the question that is in the chat, so sorry, my bad. Yeah. I don't have any more questions. Thank you.
Thank you. Thank you, Abdulaziz.
Well, on that note, we'd like to thank everyone again. Always good questions in this session. We do appreciate the interest that you all show. Thank you for joining us today. And we look forward to seeing you all again when we do this at the end of the first quarter of 2025. We wish you all a very blessed and peaceful Ramadan. Thank you very much.
Thank you very much. Thank you.